Hello, welcome to Patito's Gang. I'm Nena Jemie. Life is like a box of chocolates. That's how the saying goes, right? You never know what you're going to get. Well, you'd think since we know how uncertain life can be, that we'd value having insurance, which is meant to protect us when things go wrong. But it's not that simple. How can we get the Nigerian insurance industry to grow? The gang discusses this today. Let's tune in.
Well, insurance is one sector of Nigeria's economy. Sometimes one wonders how they're able to survive or how they're surviving. The question is, can insurance in Nigeria rise to promise? And unlike in the 60s and the 70s, where individuals own insurance and now corporations are owning insurance and all that, but Nigerians getting more aware of the need for insurance and that how can we make insurance that will be more profitable?
But I think also perhaps it's important, acknowledging that we have a very senior executive from the insurance industry of this panel to kind of make the point about why insurance is so critical for development. In most capitalist economies, actually a good part of the savings that drives growth and development comes from insurance.
Yeah. Right.
Indeed, it's insurance companies that own banks rather than the other way around.
Yeah.
Venture capital in America wouldn't be what it is without the insurance industry.
Correct.
Because when you pool a significant level of savings, you are very prudent with some portion of it, but you can then afford to risk a small portion in a way that can drive innovation and growth for that economy. So you find that many venture capital companies draw the resources from the higher risk portion of the insurance pooled savings. But in our country, we have seen a deterioration in the possibilities for the insurance industry. In the 60s, we had the concept of industrial life, where insurance people went to factories, went to Balogun market and collected every week 5 shillings from the woman. The woman knew the value of life insurance, and every week she gave back 5 shillings for her insurance premium. Big insurance companies like British American rose on the strength of them. They were purely an industrial life company. Now, we're sitting here where people should be more aware, should be insuring more, and we're not seeing that awareness, we're not seeing that an economy is losing the possibilities of significant pool savings from insurance. So we've got to find out what went wrong.
I don't know.
It's really important for you to look at Nigeria in perspective. What has happened to Nigeria pre-independence, post-independence, and now? Insurance as an industry was not African. It was not Nigerian. You mentioned British America, for example. That was a European company. Okay? American International was here. That was an American company. And there was Royal Exchange also. That was also a European company. Now, they started insurance in Nigeria, and they knew exactly what to do. And they were institutionalized companies. They were not companies owned by individuals, remember? Okay, so at that point, insurance was being done as indeed it should be done. So we transited. Everybody said, well, many of those companies were then sold to Nigerians over time, following the digitalization and all of that. And then, over time, Nigerians even started their own companies. Think about Nigeria under British rule, post-British rule, and what we are today. Then you will answer your question. But directly, you come to recognize that today, we're probably getting back to where we should have been in the first place. Now we have insurance institutions that want to do it properly. You talked about industrial life. Industrial life existed both in Europe and several parts of the world at that time, and was then called industrial life because they were selling to mostly employees in the manufacturing sector, which was the dominant sector in those days. In Nigeria, over time, that business was lost to the banks. They called it Esusu. Remember, banks started opening branches in major markets across the nation, and they actually took over from individuals that were also doing what you just mentioned. But think about what has happened to British America, American International, as it was then known, Royal Exchange, as it was then known. They transited from, I'm not going to say foreign management, international management, to Nigerian management. And I'm of the school of thought that we have not done a very good job with our institutions, which we took over from foreigners. It's not just about insurance. Look at the banks as well. And let's talk about movement of capital for a moment. Remember, at a point, it was First Bank, Union Bank, Afribank, one of them. Later on, Nigerians started owning banks and finance institutions. What happened? All sorts of games are going on. No. This is exactly what has also happened.
The banks have done a lot better in terms of competence in management. I think most people agree that the most competent indigenous enterprises today, in terms of how they're managed.
Yeah, but what happened? What happened? The capital requirement for that business changed. Today, if you raise the capital requirement for insurance institutions, there will be no Value Juma and Co. any longer. Corporate governance will be introduced and will be enforced, not for the sake of the company, but for the sake of the owners. Today, for example, the only recognized insurance institutions, and I use institutions with every sense of responsibility. First Bank has got one, right? AXA Mansard is not owned by Value Juma and Co. You know that. You know about ICO. I'm not going to talk about that. Which other institutions are actually not owned by the insurance industry?
But I think we're keeping it in a very narrow spectrum.
Yes,
we also need to understand there are some things that we did to that sector that cannibalize the sector. We also need to understand that insurance is a risk management tool on which there is a fiduciary trust that sits there. And without that trust, that industry will not work. So for example, you have the National Deposit Insurance Company.
Yes.
It's insurance. But guess what? Nobody, I don't know any depositor in Nigeria whose dependency that if something goes wrong, NDIC will sort me out, because they will not. The maximum is ridiculous. Then you look at the National Health Insurance Scheme. In terms of a trust matter, they failed. I don't know how many Nigerians depend their health on that. Hang on. Then you go to something like mortgage, and then they now stripped out something that should be core insurance cash flow business for longevity, the pension funds. So you see, we have kind of, in one way or the other, cannibalized the trust on which an insurance industry is built, as well as stripped out the longevity of the cash flows in the pension funds. And then what are they left with? Motor insurance?
We will not comment on NDIC or the health insurance because they are government institutions.
But that is what the average Nigerian is.
The reason they exist, as they currently exist, is a combination of politics and what actually happens outside the world. NDIC clearly is doing its mandate. Now, if you want that limit increased, it has a cost.
What's about the reason? I'm talking about the trust.
I'm talking about the trust factor.
If I have 5 million in a bank,
yes,
and the bank goes down, can I trust the insurance sector or the insurance?
The NDIC will pay you what they said.
That's my point.
Yes, they will
pay. But what will they pay?
Well, not that's defined. If you want to insure it over and above, that's a trust.
It's not a trust.
No, it's not. I think you should look at the trust factor. You look at it from the environment that we exist today. Every one of you here today has a family. How much trust do you have in family today?
I have 100% trust in my own family.
Well, then you must be exceptional.
Oh, okay.
No, I must say that. So truly, the society we trust today, over time, trust, the word trust has been bastardized.
In which case,
that has also been translated in every business we do today. Although in different
ways. We really have to look at policy, because policy plays a very important role in understanding this. And one of the reasons I think the insurance industry went through a bad spade is the change of the policy environment when we went through structural adjustment programs. When I was leaving the US to come back to Nigeria in 1982, I had a $100,000 policy, which still exists in Indianapolis. I returned to Nigeria and I wanted to have another policy of exactly the same value.
Yes.
And I started one with ICO.
Yes.
Exactly $100,000 in worth. At that time, it came to I think about 60-something thousand naira, 68,000 naira, whatever. And I was paying my premium in the States. I was paying my premium here. A couple of years later, because of inflation and everything,
You've said
if ICO had to pay me, I could have lunch.
well, precisely.
But if they paid me in Indianapolis, my kids could go to university on the money.
That's right.
Now,
Prof, what you did not know or you were not told is that there is a policy, there's an insurance policy that responds to inflation. There's an insurance policy that responds to degradation in the value of your currency. You cannot hold the insurance industry responsible.
No, sorry. I think you have to hold it there. We've gone a short break. When we return, we get back to that. Then we also move on to what the impact of the consolidation of insurance, sector, because there was an expatriate staff that came and wanted insurance, went to one of these insurance companies, oil and gas. The insurance company could not afford to take him.
capital base.
Capital base.
To take him as an employee or as what?
No.
Well, the
assets.
The assets. So when we return, we look at it.
Let's talk about it when we return.
When we come back, we continue with the debate.
In the gang's opinion, the Nigerian insurance industry isn't at its peak because, well, insurance isn't an African concept. What are your views? Let's hear from you. Take it to the streets.
When the government is saying that way, it will be reduced. We don't want people that are just striving to get there.
The insurance, like the banking industry, need a kind of a review and recapitalization to meet up the challenges. But in as much as the challenges are already there, they can still innovate and look at critically how they can use the insurance industry to salvage Nigeria from the present economic predicament. We have been hearing about recession, but at the same time, there are no statistical data to know exactly where we are. Like, are we truly out of recession, or the recession is still coming, or are we still in it? So the insurance is like the shock absorber that should propel Nigeria to a better understanding of financial management and risk management. And I believe strongly the Institute of Insurance need a kind of review and get the missing link to address the problem inherent in both insurance and banking.
The insurance company really have to do a lot in terms of trust. People have really lost trust in the Nigerian insurance company. I can recall myself, I did that last year, and when it was time to claim the insurance, they got very smart with the whole clause, although it was a comprehensive insurance. I really find that I was very disappointed with the company actually, and with that kind of thing in mind, imagine how many people have told that kind of thing, and it also have a knock-on effect on other people that want to do insurance in Nigeria. The other ways things are done in other countries, once you have insurance issue, once you submit your claim, they even give you a complimentary card to, okay, use this card while you sort it out. But it tends to be a different way in Nigeria, although you pay about the same amount of money that you pay over there and here. So they really have to do a lot with the trust issues. And people don't mind paying for insurance. In fact, I believe paying insurance is the best thing for me. We do that for our businesses and stuff like that. But when it's time to really do the claiming part, they get very, very technical with it. And I understand Nigerians are very, very clever people when it comes to insurance claim, but they still have some very genuine cases that are obvious. So I think they're doing quite a lot in terms of strategy, but that trust issue is something they really have to sit down and nail it collectively, not just one insurance company doing it. They'll have to sit down and really do something about it.
Before we went on break, we were talking about insurance companies not having the capacity to take on some level of insurance. And
No, but before we go to the capacity issue, you see, we need to, the trust issue cannot be overemphasized. You spoke about Prof's insurance policy not being adequate for the environment. But who is responsible for educating the ordinary man on what goes on in an industry or the industry product? That is the insurance industry's responsibility.
Prof is certainly not an ordinary man by any standard.
Okay, to
answer you directly.
No, but I've asked the question yet. Okay, that's the question first. So if you go into banking, you walk into a bank. When banks were, I mean, the quality of bankers today is not like it was 20, 30 years ago.
Right.
Where you walk into a bank and they sit down with you and give you options and alternatives on what you can do.
Sure.
And now, but at least through the media, you see the options, they advertise, they spend a lot. We look at the marketing budget of the banks, it is massive. The insurance companies, if you pick the average man, outside motor insurance, I assure you, people are very ignorant. It is the insurance industry's responsibility to educate the people on what they can do and why it benefits them.
And I can speak to that actually from a very, when Ogala Osoka was managing director at Nigerian Re or Nikon, one of the two back in those days, I said to him, look, you can do something that will change the cost of insurance in Nigeria. And I gave him the example of orange juice and milk. I told him, when I was an undergraduate in Nigeria, it was a big deal to go on summer vacation in those days. It was, if you went on summer vacation, you kept the ticket around on your tail. So people were and one of the ways they knew you went for summer, you were talking about OJ.
Yeah.
People take people on time to that OJ is orange juice. Orange juice was such a big deal.
Yeah.
What changed all of that? The orange growers in Florida, we got together and they began to run these campaigns, trade group campaigns, jointly. After a while, if you ate breakfast and you drink orange juice, something was wrong with you.
Yeah.
Orange juice and breakfast came to be one.
Yeah.
Now, I said to Ogala, could you organize the industry? You as the leader, I think it was at Nikon at that time, put up most of it, run a trade group campaign to get people
Educate
more aware
people.
of insurance. He thought, it was good, but it never quite happened as was suggested to him. The industry still needs to work together, co-opetition.
100% I agree with you. There's nobody out there that will not agree with you. And I think the trend today is that the regulator, along with the industrial associations, are actually talking about it. I think in
25 years after I suggested
in 2018, you will see the industry coming together and having that kind of campaign. But coming back to the trust factor that you're talking about, I think that over time, trust factor has deteriorated to the point where we are today, and everybody is waking up to recognize that yes, insurance and the word trust actually go together. They cannot be completely separated. Your comparison with the banking institutions is understandably so because the government, and in fact in any economy, there's a major emphasis on the banking institutions because of their relationship to fiscal policy. Insurance in our climate is not exactly there. We're still very far away from where we could have been. And it's a combination of several factors. Culturally, and I dare ask you, Doctor, how many insurance policies have you bought voluntarily? It can't be due to lack of knowledge, and it can't be due to lack of trust, because you know me, and you know my institution, and you know several other people.
Right.
So why do you, if you can tell us here?
No, but there was a something that happened at the Lagos Business School breakfast meeting.
Yes, I was there once.
Okay, and they were asking people, do you have insurance? And I said, God is my insurance. And some of the CEOs,
So there are cultural and traditional factors in all of this.
But there's also the factor that nobody buys insurance in itself. You have to highlight the risk. The risk.
Value.
Not the risk.
No,
what is the risk? I
if
am
you focus on risk, nobody's going to buy.
No, show me the risk and show me the mitigant to the risk and I will buy it.
Well,
but guess what? The insurance, nobody goes around advertising burglar proofing. But you don't go to any house without finding burglar proofing because we're all aware of the risk. If you highlight the risk as an industry, people will mitigate the risk.
So if you look at risk, look at it from the point of view of risk management. Okay? So let's use the most simple example.
Car accident.
We lose Biro every minute, every day, don't we?
I think mine were designed to be lost. Because before I know the thing, I've lost it already.
Is there any insurance?
So basically, have you ever heard of anybody buying insurance
to cover
that? The answer is no.
Let's use mobile phones. There was insurance.
Let's even talk about mobile
There was
phones.
insurance against theft of mobile phones.
Yes, but there still is.
It has withered down from where it started.
There's
Guess
still
what?
is.
You know why? Because in my opinion, the insurance industry did not invest in the technology to prevent the fraud that's inherent in that type of insurance.
No, but
it was exploited.
If insurance institution has to invest in every technology to prevent a loss,
Not to prevent the loss,
Or
to prevent the fraud inherent in the solution they are providing. They must invest in
you know that is environmental.
But there's a point to that. In fact, if you go back to the earliest days of how insurance practice itself started, in those very early years, there used to be lots of fires in textile mills all over the world. In America.
And none of them will avoid buying insurance.
No, they were not buying insurance.
But who's
because
gonna
they were
buy
always
insurance?
losing the money. Insurance companies were afraid of insuring textile mills because every day there will be fire, they will lose. So one insurance company invested in the technology of what's this thing they put in front of fire hydrants.
Yes,
Exactly.
And completely changed the risk profile of
textile companies.
Exactly. The insurance companies that do a lot of home insurance also invest in the security companies around securing the home. They have to invest in the
But let's look
infrastructure.
at the environment for a moment. If they do that and ask you to pay appropriate pricing, what would you do?
What is
many
appropriate
of
pricing?
Many of you today don't
What
buy
is
comprehensive
appropriate
cover
pricing?
for motor vehicles.
What is appropriate pricing?
No,
Well,
but
aligning the cost of providing the service.
No, but
So,
it will be
what you are doing?
it will be a good advantage for the insurance companies to invest in some of these technologies.
But they do. They actually do.
Yes.
That's
So,
what
but but because I see the innovation sector and insurance, the insurance sector is like risk mitigants. It will encourage the society to take more risk.
Exactly. Exactly.
When they know that insurance is there.
But that brings us.
Okay, but let's take the issue of the
insurance
most
is-
common one that everybody knows: motor insurance.
Yes.
You know you lose your motor vehicle in some way. If you're not a careless driver, the other driver will be a careless driver.
Yes.
So if you live in Lagos, for example, you know they'll scratch your car. You know something will happen.
Yes.
How many vehicles, and I dare say of people of middle class and above, perhaps not one of us, but middle class, how many of them, knowing what they know, actually buy comprehensive cover?
See, that's my point. What they
No,
know.
I want to understand
It's just element too.
No, apart from the trust element.
The trust element at this level.
Let me digress from the trust
cannot-
element. What they know is inadequate for them to buy insurance. Who should educate them?
What's your first name?
That's the question.
See, I do not believe that they don't know.
Well,
No,
that is an
definitely not.
opinion.
No, see.
From the average Nigerian.
All right. On that note, we have to call it a day. It's been very, very interesting. Patito's Gang, where the marketplace of ideas, and we've been talking insurance and whether they can achieve get the rise to the promise. Join us next time, and we'll be there.
In closing, the gang suggests that in order for the sector to grow, the insurance industry should do more to educate the public on the importance of insurance. Well, that's all that we have time for today on Patito's Gang. Thank you for joining us. We hope you found today's episode to be informative and enlightening. Join the conversation. Be sure to follow us on all our social media pages displayed right there on your screen. I am Nenna Jemie. And until next time, take care and be well.